Good day to you, Travis. Today is June 23rd, Tuesday, and I thought the market was going to respond more today with the news that was going on. There was nearly or a little over $40 billion worth of 2-year Treasury notes auctioned today at 10 o'clock Pacific time, and the market was really in a small trading range this morning prior to 10. And I think anticipating to see the global and domestic interest in these 2-year notes, 40 billion worth of them actually, and so they did really well. And surprisingly, knowing that China, Timothy Geithner, our U.S. Treasury Secretary, went over to China here about nearly 2 weeks ago to kind of smooth things over with China when the announcements came out that we were going to start printing so many Treasury notes and bonds, because China has $990 billion worth of our U.S. Treasuries and bonds in their possession or holding, and nearly $1 trillion they have backed of our money. So the more and more we print, the likelihood is the less and less valuable they become. And so to see this Treasury auction go well today, knowing that there's going to be a total of 104 billion this week alone in other Treasury notes, so it's an all-time record for the U.S. to auction that much in 1 week. It did cause concern initially, but fared pretty well today. So bonds are still, the bonds are up 12 basis points, not a real big swing at all. The Dow was down 18 a minute ago, so real small trading range today. I think the big news and the big concern is for tomorrow. Right now, the Fed, or the it stands for is the Fed Open Market Committee. That's what it is. I'm trying to think of the acronym. It's the FOMC. They meet every 6 weeks. It's headed by Ben Bernanke, the Fed chair, which I'm sure you've heard about in the news. They meet every 6 weeks to discuss monetary policy as well as the concerns of inflation and what their stance is going to be on where the Fed funds rate, the interest rate, should be for short-term money. Fed funds rate then in turn affects prime rate, which they usually just coincide with each other. And so whenever the Feds raise rate, it's typically in fight of inflation. And with the recent reports coming out, the CPE and different PCE and different reports that have come out that they usually measure inflation by, they were really weak. And so there's not the inflationary pressures we thought may be creeping into the summertime that we thought. Oil's up a little bit, but you usually remove food and oil out of that equation to truly gauge what the inflationary pressures are. And with that, tomorrow they come out of their meeting they have every 6 weeks. They meet for 2 days, and tomorrow they come out and they usually make a statement. And that statement can be one sentence, it can be a couple sentences, but man, the traders are like watching that like hawks when they come out of that meeting to see what they're going to say. And typically there will be a release, and most often the big market movers are when they announce that they're going to adjust interest rates lower or higher. That likely will not be the case tomorrow, but if there's even talk of interest rates being raised down later in the year, most likely stocks will go on a rally and bonds will take a hit and bounce off this big significant 200-day moving average that we've been sitting up against for the last 3 days in a row, bouncing off of. If they don't say anything about interest rates, and the talk is that they're going to come out and announce that they're going to be more aggressive in purchasing mortgage-backed securities because treasuries have become too valuable in their yield spread versus the value of a mortgage-backed security over 30 years. So if you can get the same rate in return on a 10-year treasury note that you could on a 30-year mortgage-backed security, then of course you're going to take the 10-year note. You get your money and your return faster than if you had to invest for 30 years. So they're going to try to get that spread, or that TED spread as they call it, bigger, so mortgage bonds and mortgage rates can come back down. So tomorrow is a big day. So I locked several people in today just to make sure that we weren't playing with their money, just to be certain that if it does go the opposite direction, we are locked in and we can stave off some of the damage. If it gets improved, then we can obviously negotiate, and hopefully our investors we work with will understand and give us a better offer. So that's the big news. Is right now is tomorrow. All eyes are on tomorrow afternoon or mid morning when the Fed comes out and announces. It's usually about 11 o'clock our time here on the Pacific Coast. So that'll be the big announcement tomorrow. I'll do an update tomorrow to make sure you are in tune. And I just encourage you to go to neliton.com, NELITON.com, as we continue to update that webpage for our clients and discussion boards and different things that are going on. So we look forward to serving you. Have a great day and be blessed.